One of the biggest factors backing Tesla's $1.2 trillion valuation is its investment into robotaxis. The robotaxi market, according to some experts, could eventually be worth up to $10 trillion globally. And by many accounts, Tesla has an enviable position when it comes to taking a heavy share of this emerging market opportunity. So today we're looking at the negative as well as the positive. I'll leave timestamps down below. So there's one problem with the robotaxi service, and it is called the United States National Highway Traffic Safety Administration. Well, the NHTSA recently escalated its investigation into Tesla's full self-driving FSD features, which are active in 3.2 million of its vehicles. How big is the deal of this investigation? Well, Tesla investors, as well as investors in any other EV or autonomous driving stocks, should pay attention, according to the Motley Fool. Here are the details of Tesla's regulatory probe. According to reports from Reuters, the NHTSA first opened a preliminary evaluation into the automaker's FSD software in October 2024 into 2.4 million vehicles. But in recent weeks, that evaluation was expanded to 3.2 million vehicles, with the NHTSA fearing that the system may fail to detect or warn drivers in poor visibility. Also, the NHTSA has already reviewed several crashes involving Tesla's FSD system and claims that the software occasionally lost track or never detected a lead vehicle in its path. How big of a deal is this inquiry? It's hard to know exactly what the impact will be this early, but what we know is that the investigation strikes at the heart of what's driving Tesla's valuation these days. In recent years, Tesla's sales growth has slowed tremendously. In 2025, the company actually delivered fewer cars than it did in 2024, leading to its first ever annual sales decline. How then has its valuation continued to rise despite flagging sales growth? Well, it is the robotaxi business. Robotaxis are arguably the biggest driver of Tesla's valuation, which will exceed $1 trillion. And yet for now, the company generates far less than 1% of its revenue from its robotaxi business. The market, it seems, is already pricing in huge growth potential for this business segment. And while the recent probe won't completely derail Tesla's dream of robotaxis, it does have the potential to delay their launch, possibly impacting its ability to secure early market share. We are now at engineering interrogation, wrote Gordon Johnson, CEO of GLJ Research, one step from a mandatory recall. A recall could cause investors to question how much of the market has already priced into Tesla's robotaxi growth potential. You cannot build a $1.2 trillion robotaxi company on software the federal government is one determination away from forcing it off the road, Johnson wrote. A forced recall on the software stack that powers the robotaxi story ends the robotaxi story. This is not priced in. It's hard to question Johnson's logic. However, I might add that Johnson has never been right. He's always been a Tesla bear. He's never been right once about Tesla. So anyway, however, Tesla's automotive business is no longer a reliable growth driver. Meanwhile, the company is investing billions of dollars into business ventures that largely remain pre-revenue. Selling additional stock with $1.2 trillion valuation has made the financing of this transition very feasible. But if we see a recall, Tesla valuation premium could shrink quickly, adding even more uncertainty about its ability to transition itself from an energy and auto conglomerate into a robotics and robotaxi giant. Yes, Tesla's always been looked at closely, more so than any other companies like, let's say, Google's Waymo. But most of Tesla's future revenue will come from the Optimus robot, not the car manufacturer. FSD is getting closer to every update, and you can't really compare LiDAR with AI. So Gordon has never been accurate ever, not once, and he never liked Tesla or Elon Musk. Sorry, I just had to add this. Let's talk about the positive. Now, ARK Invest views the robotaxi opportunity as the primary catalyst for Tesla's long-term valuation, projecting it will account for 90% of Tesla's enterprise value and earnings by 2029. Now, their current model sets an expected stock price at $2,600 per share by 2029, with a bull case reaching $3,100. According to ARK's calculations, the market opportunity and revenue potential will be $10 to $11 trillion. So, in other words, ARK estimates the global addressable market for autonomous ride-hailing at roughly $10 to $11 trillion. $34 trillion enterprise value. So by 2030, ARK projects that robotaxi platforms could generate up to $34 trillion in total enterprise value. ARK expects Tesla to generate between $603 billion and $951 billion in annual robotaxi revenue by 2029. And this is why ARK expects Tesla to win the race. They expect cost advantage. Now, Tesla's service could be priced as low as 25 to 40 cents per mile, significantly undercutting the $2 plus per mile for human driving ride-hail. Here are the key performance indicators and catalysts. Launch and scale. Tesla officially launched its pilot robotaxi service in Austin in June 2025. As of early 2026, the fleet has logged 650,000 miles and aims to serve 25 to 50% of the US by year's end. ARK assumes Tesla could command an 80% take rate of its platform due to the vertical integration and lower hardware costs compared to Uber's 30%. Software margins. The shift to autonomous service is expected to drive cross margins to 70 to 80%, far exceeding the 15% typical for automotive hardware manufacturing edge. Tesla's ability to produce thousands of vehicles daily, including the upcoming Cybercab, is seen as a critical scaling advantage over competitors like Waymo. And here are ARK's 2029 valuation scenarios. Now, in a bull case, the stock price would be at $3,100 with a implied market cap of $10.9 trillion. Their expected value is $2,600 with a market cap of $8.3 trillion. And in their bear case, the stock price would be at $2,000 with an implied market cap of $7.0 trillion. Tesla's robotaxi potential is a massive driver for its $1.2 to $1.5 trillion valuation as of early 2026, with some analysts projecting it could transform the company into a $5 trillion plus entity by 2029 if successful. The market is increasing, valuing Tesla as an AI and robotics firm, with robotaxi revenue potential reaching $250 billion by 2035. However, the valuation assumes near-perfect execution, facing risks from regulatory scrutiny like the NHTSA investigations, competition, and delayed timelines. The global robotaxi market is projected by some to be worth up to $10 trillion, offering substantial room for expansion. Bank of America suggests that over half of Tesla's valuation now stems from the promise of robotaxis. ARK Invest estimates Tesla's value could reach up to $5.7 trillion by 2029, assuming high-scale global adoption. Wolf Research projects that Tesla's robotaxi revenue could grow to $250 billion by 2035. Increased capital expenditures of over $25 billion per year indicate massive investment in AI and autonomous systems. The key risks and uncertainties. Timeline and execution. Critics argue that competitors like Waymo are ahead of Tesla, and that Tesla has a history of missing autonomous driving timelines. Regulatory hurdles. The NHTSA is investigating Tesla's full self-driving FSD features, which could delay the necessary permits for a driverless fleet. Valuation premium. Now, some analysts believe the stock price is already fully priced in the success of the robotaxi business, leaving little room for error. Margin pressures. While robotaxis offer high margins, current vehicle sales have faced pressure, making the transition to software-focused revenue critical. Now, key 2026 indicators. The upcoming August 2026 robotaxi unveiling and Cybercab production plans are considered their catalysts that could define whether Tesla justifies its high valuation. Key metrics to watch include FSD adoption rates, regulatory approvals, and the ability to scale to millions of vehicles. Tesla's valuation depends on FSD and Optimus, but also energy production. Arks Valuation did not include the Optimus humanoid robot. Tesla is now producing their own chips with their soon-coming Terafab factory. I believe Tesla is on the ball, but it also seems that there will be a SpaceX Tesla merger somewhere in the future. There are just too many signs that hint to that conclusion. But I would love to hear what your thoughts on, or what your opinion is, good or bad. Let me know in the comments. Also, if you'd like to know more about Tesla, Elon Musk, and his other companies, you could watch this next. And don't forget to tune in next time for more updates. Thank you so much for watching. My name is Claudia, and goodbye.